Hello, and welcome to another video from StageAnalysis.net. Today's video is the weekend update of the major US stock market indexes and indicators, where I'll go through the major US stock market indexes plus the key market breadth indicators, including the Bullish percent index, the new high, new lows indicators, the advanced decline line indicators, the percentage of stocks above their key moving averages, and some custom indicators exclusive to StageAnalysis.net, including the sector breadth chart with relative performance rankings of the major sectors. This week, I'm also going to talk through some of the gold mining stocks, and I'll finish off by talking through Bitcoin, as it had moved to stage 1 recently with a strong rebound from the stage 4 breakdown. So the purpose of the weekly market breadth update is to help determine where stocks will go next based on the combined signals of all of the market breadth indicators, which is referred to in the stage analysis method as the weight of evidence. To see more of the market breadth charts and regular stocks watch list, go to stageanalysis.net. And to get all of our latest videos, please subscribe to the YouTube channel and please hit the like button below the video on the YouTube page and leave any comments below. Okay, let's begin. So we begin today with the major index charts. Obviously we've had a few weeks of consolidation, as you can see in there. So we start with the S&P 500 on the left here. We've been pushing up into areas of resistance, and there's been some sideways trading for the last few weeks, and we broke out earlier in this week out of the top of that range that had been forming. But obviously you can see how the week closed with a strong reversal to pull back with a slightly lower close on the week after the week before with a strong push down and then pull back to the top. So first of all the bears tried to push down and the bulls rejected it, and now the bulls tried to push out and the bears have rejected it. So we're at a point of indecision at the moment, but this pattern, especially on a weekly chart, is often a reversal pattern. So, and especially the fact that we're at some key resistance levels, so it could well have been a bull trap this week for those buying on the breakout of the major indexes. As you can see, there were some major stocks that also turned around quite heavily at the end of the week, although obviously, because there was a lot of earnings during the week from Apple, Tesla, various other like big names like Google, and so their earnings results were all reasonable. There wasn't anything horrendous, but and some of them pushed higher initially, but they didn't get the normal kind of pops that you'd expect to see. So the news base, so with the news obviously not terrible, and obviously them not moving very much higher, it does seem like we're possibly at a turning point. The Nasdaq 100, which has been in the strongest index of late, is still above a rising 30-week moving average here, but again we had the similar sort of pattern. It didn't break out as far as the S&P 500. Yeah, and it had a more modest breakout and pullback, but we're obviously making a similar pattern. But it remains by far the strongest index and it's well above the March low here, whereas obviously the S&P 500 is still below a declining 30-week moving average and has pulled back to obviously it's the resistance levels. The Dow at the bottom here, it remains below the 2019 lows here. It pulled up to them and obviously has been rejected. It's still well below a declining 30-week moving average. The small caps this week, people got quite excited when the small caps started to break out with some extreme moves. We had some 50% plus moves in some of the small cap stocks, which have been so depressed for so long now, for a good couple of months, and they broke out on some heavy volume and made some initial massive gains, but were rejected strongly on Friday. And as you can see in the bar here, we may have ended the week up 3.48%, but we were a long way up further and earlier in the week. So a lot of stocks got people got in, will have got trapped again at a higher price. So again, it's not a great sign for that. Let's move on now. So onto the commodities indexes here, and so we've got starting off with the Treasuries at the top here. This is 7 to 10 year Treasury. It's basically had another very minor week, slightly down, but still consolidating near the highs, above a strongly rising 10-week moving average and strongly rising 30-week moving average. So not much new to report there. Still in strong stage 2. Gold had a 2% pullback this week. noted in the gold mining stocks as well, so in the especially in the GDX stocks, which I'm going to talk about some of them later, but again remains near the 52-week highs. It's not far off, it's still consolidating in this 4-week consolidation here above a strongly rising 10-week moving average and 30-week moving average. Volume has been quiet for 5 weeks now as we've consolidated, so it's a good sign that the path of least resistance remains higher for gold, so at the moment. But obviously if the market does have a pullback, we could well obviously get another pullback again in gold potentially, as people get margin calls and people that have obviously got winning positions take profits. So but hopefully we should get a strong rebound if that does occur. And next to the bottom here, oil had a strong 16% rebound this week off of obviously ridiculously low levels from the previous weeks where it went down obviously to historic lows. Copper, so oil still remains in stage 4, still well below declining 10-week moving average there, but obviously attempting to make a reversal off of those lows. Copper turned this week at its declining 10-week moving average, remains in stage 4. Nothing new to report there really. It's stage 4, it's a bounce, so we could see if the market reverses lower, we could see copper continuing its stage 4 decline here. Moving on. So next we've got the percentage of stocks above the 150-day moving average. This is a custom scan I do each week myself, where I break down the 11 major sectors and the 2 major, the NYSE and the Nasdaq, and plot them out in the same way as the Bullish percent index is plotted out in a 0 to 100% chart. Each one of these ranges is a 10% block, so anything below the bottom level here is in the 0 to 10% level, and 10 to 20% level, 20 to 30% level, etc. And then obviously I've got some ratings over here. When you're below 40%, you're generally in a bear market, and when you're above 60%, you're generally in a bull market. So as you can see, the majority is still living in the bear market territory, with vast majority still below 30% level, which is the key level. Once we start to see multiple sectors breaking out above this 30% level, we'll get a lot more bullish. But for the time being, they will still remain in the lower levels, with financials, industrials, energy and real estate still below the 10% level, so really depressed. But overall, the NYSE and the Nasdaq are both in the 10 to 20% range, so yeah, we're not there yet. And so let's have a look at the individual percentages on these and what happened this week. There wasn't much change this week compared to last week. It was only a minor percentage change overall. We had as you can see for the individual names here, so consumer staples was only 0.87%, for example. Utilities, the biggest week down, 5% down. And who was the biggest up? So consumer discretionary, basic materials had the strongest up week. It's at 28% now. Healthcare still leads, with energy has moved off to the bottom finally, up to 8% here, with real estate taking over the bottom. But financials is by far the biggest sector, with the biggest amount of stocks. So with this still depressed down at 7%, like, you want to see financials way up the table in order for a bull rally to get going. So we will hopefully see that in the coming months. Okay, next, this is the NYSE Bullish percent index on the top left here, and the Nasdaq Composite Bullish percent index on the right. And below we've got the percentage of stocks above their 200-day moving average, 150-day moving average and 50-day moving average. So left is NYSE and the right is the Nasdaq. So this week was a down week. It was an up week in the Bullish percent. We pushed above the key 70% level, but it pulled off near the end of the week. Nasdaq same, had a strong up week, but tailed off at the end of the week. The percentage of stocks above their 200-day moving average had a down week, however, with a few percent down, still remains depressed at only 14% there. 150-day at 13%, and the 50-day continued higher. It's above the key 30% level, but that doesn't mean we've got a signal on these short-term ones. I've seen a lot of people talking about these and the fact that they've moved off the lows and showing historical points where they've moved off, but with the short term and the medium term ones, like you often get breaks back above and then we get a pullback down below again. Like the signals for these moving average breadth and the bullish percent do not come from the line charts, they come from the point of figure charts. And the point of figure charts have given short term signals, and we're back on a bull confirmed on the short term there, but the medium and long terms still remain on bearish signals. So it'd be good to see the short term pull back down into the range again, and then we should get a much stronger signal the next time it breaks out, and that will be a time to get much more bullish. So next, this is the we got the advanced decline line charts. So we did get a short term bullish signal again the other week, which highlighted where it broke out again. We had a strong pullback this week back towards the breakout level again. It remains above a declining 50-day moving average, so not much new to report there. And again, pullback in the McClellan oscillator, remains above the zero line low, so would be obviously a break below the zero line, and these two recent lows would be a bearish signal there. The summation index broke above the zero line this week and remains in a short-term uptrend. So again, the pullback below the zero line there and start to trend lower again would be the bearish signal there. The 10-day momentum index, again similar to the McClellan oscillator, we had a pullback up and has pulled back down again. So we're still in a range here with a conviction move below the three recent lows here would be a bearish signal on that. The 200-day momentum index, this is the one from Stan Weinstein's book. This is what he calls the momentum index. Has been obviously trending lower for many months now. So obviously started well before the market breakdown happened. It's one of the reasons we got more bearish in February time, as we were making continually lower lows and the momentum was drying up while the market was making higher highs. So with obviously a breakdown at the end of the month, that was one of the signals. So we're still in a range bound mode here. The cumulative 10 and 30-day EMA crossover, we had a crossover a few weeks back and it pulled down again and it crossed over again, and it's now still on a bullish signal currently. So but they're very close together, so this could turn quite easily, but at the moment that remains on a short-term bullish signal. Next we've got the new high new lows index. Again, this remains very depressed. We've had very few new lows as the market's been rallying, but in terms of new highs, as you can see, 247 on the 5-day cumulative there, and the actual cumulative line here has a very tiny pop up but remains very depressed, and there's been very little. You want to see the new highs breaking above this key 100 level on a daily basis to signal that we're moving into new bull territory, but at the moment we are remaining negative territory on these and still very depressed, so no new signals there. Okay, next, this is an area I wanted to talk about this week as one of the strongest areas since this coronavirus crisis began has been the gold mining stocks and gold. So these are 8 of the GDX stocks are showing some of the strongest relative strength. Like we've got, for example, using stock charts relative strength ranking, we've got 99.9 on Newmont. Barrick Gold's got 99, and Franco-Nevada Corp's got 98. So these three are some of the strongest gold mining stocks out there at the moment. I'm sure you could find more that obviously had lower volume, but obviously from the ones that are tradable in my portfolio that I can look at, these are some of the strongest, and so they've had obviously 100% moves in multiple stocks all across the gold mining index, and we've been consolidating now for a week or so. So there's potential for further consolidation, further pullbacks, or we could obviously create high type flag type patterns here and continue higher straight away. So I'm watching for obviously short-term breakouts or pullback entries on these. Next ones we've got AU here, AEM, Royal Gold and SAND. It's all making similar patterns, all with like 50 to 100% moves in the last month since the low, and well back above 200-day and 50-day moving averages, and with some making new 52-week highs. So yeah, this is an area I'm keeping a strong eye on this week. Okay, next, this is Bitcoin. It's something I wasn't considering trading, and something I haven't considered trading before, but obviously it's been getting more traction of late. There's now, obviously, we didn't used to show the volume on the charts, but now it's becoming a bit more mainstream. There's more ETFs that are tradable in pension accounts, and so with it moving, with it showing some obviously good relative strength of late, and obviously the move it had in the last year, it had a stage 2 breakout, and the recent stage 4 breakdown was quickly reversed and it's moved back into stage 1. So it's something that caught my eye over the last week, and something I've talked about a couple of times. So this is something that I wanted to do a focus on. So starting on the left here, we've got the monthly chart. So as you can see, obviously had ridiculous moves from 2015 to 2017. I remember the Christmas conversation. My brother was talking about Bitcoin at that point of time, and like, he doesn't trade stocks and knows absolutely nothing about stocks, and he was talking about his friend and all the people at his work were buying shed loads of Bitcoins. And so that was as we can see, if we move over to the weekly chart, that signaled that was the exact top of the market, and obviously something you obviously hear about quite regularly, where obviously when something becomes massively mainstream, it's generally the top. So that was the case in this regard. But obviously using stage analysis, you can walk through the stages, and you can see we had a stage 3 top there, and then we broke down into stage 4 in early 2019. It started to base again in stage 1. We had a stage 2 breakout. It was a little bit of an early breakout, as the 30-week moving average was declining there still, so the actual stage 2 breakout wouldn't have been until the 30-week moving average like stopped going down there, which would have been sort of around that point, and it has had another strong stage 2 move. So what was that? It obviously had a good 100% move before topping out again, and it's moved back down again, and it's given all of that back again, and it was starting to form obviously a cup. We had a constructive cup pattern here. So if you move down to the daily charts over here, you can see this cup and handle pattern that was starting to form. It was very constructive, and so, but then obviously the coronavirus happened, and we had a collapse in the price, and as you can see, this caused on the weekly chart and the daily charts here, it caused it to move into stage 4. However, not all stage 4s mean that the stock is going to enter a declining phase. Sometimes they are quickly reversed, and you get the stage 4 is basically a shakeout, and so which is what it looks like in this regard, as it's moved 100% plus from that within a few weeks. And so if we move down to the daily chart here, you can see it's began to form yet another cup type pattern, moved back above the 200-day moving average in the last week, and we had a 13% up day on more than 3.5 times the average daily volume, as you can see down here. And this is the relative performance versus the S&P 500, which is attempting to make a new high, even though the stock is not yet making a new high. On the right down here, we've got this is the 4-hour chart. I use the 4-hour. I normally use the 2-hour on daily stock charts, because obviously you have less bars on daily charts, but the Bitcoin obviously trades like a currency throughout the day, so there's a lot more bars. So the 4-hour chart gave us a similar sort of scale on the chart. So as you can see, we had on the 4-hour chart, we had a stage 2A breakout here, and then it moved up with conviction on the, what's this, the 27th, 28th sort of period here. We had some strong volume with a strong thrust up, which is this weekly bar here. So that move up there is that weekly bar, and then it's consolidated at the end of the week, and it's above a strongly rising 30 bar moving average there. So at the moment, it's still in the stage analysis method. How we trade is that we buy stage 2A breakouts. So for example, this point here that I mentioned after the stage 1 is the stage 2A breakout. Obviously you ideally want it to be above resistance, and so the point we're at the moment, as you can see, we've got trend line resistance coming down on this monthly chart here. You've got trend line resistance here, which we're kind of moving around. We've got some resistance up here just above this 10,000 level, and so obviously the top of the stage 1 range now would be up here, so your breakout level would be up here. Ideally what we'd like to see is what we were starting to see before in late 2019, early 2020, where you get this cup and handle pattern. So we get this move up here, and then we get some consolidation below the breakout level to give it a time to rest and get rid of some of the weak hands, people that obviously just going to take short-term profits and get out, or some people that were stuck in a stock and want to get out. So we want the stock to be rested and ready to go, and with a good risk reward position. So cup and handle type pattern, or volatility contraction pattern with a few obviously higher lows would be nice. We might not get that. It could immediately break out. It could pull all the way back and move back into stage 4 again. We don't know. So the point is that with stage analysis, that we wait until the stage 2A breakout point. You can, when a stock is in stage 1 and showing good signs, you can begin accumulation, but you could obviously end up stuck in the stock for a very long time, or in this case it's not stock, but the same principle applies. So obviously if you did do that, you could traders could make shorter term plays and gradually build up a position until the stage 2A breakout point. But obviously investors ideally shouldn't get in until we get a defined breakout point, which it might not be the top of this range here. We might make a lower high, and then the breakout level would become lower, and then it would then be a move above that breakout level on volume. The point is that it needs volume. So this volume you see down here on this daily chart, we want to see that on a weekly chart on the breakout. So as you can see down here, these strong bars, you want to see the breakout on strong volume to show that there's momentum behind the breakout. So okay, I think that's all for now. Back to the beginning. Yeah, so thanks for watching. I'll probably do another one in a few weeks again, once the market's had a chance to move around a bit. Obviously the weight of evidence suggests at the moment we've obviously showed a lot of short-term strength, but the price action is starting to lose some momentum, so we could well be into a pullback phase now for a while. Whether that retests a low, obviously there's no idea. We've just got to follow the price action. So, but at the moment we've got a reversal pattern on the weekly on multiple charts, and we're below resistance on multiple levels. So obviously a pullback seems likely. So be cautious, keep those stop losses tight, and yeah, trade risk first. And yeah, I'll see you on the next one. Thanks a lot for watching, and hit the like button.